How you guys doing? Thank you for tuning in to my channel. 6 years, six figures, man. We're gonna be talking about all things real estate. All right. I want to talk about this mortgage rates today, right? This article here by CNBC.
Oh yeah, whoa. Look, they can never keep me down, I'm going. And if I ever fail, just know I'll go again. I never quit, cause I know that every loss may lead to another win. I'm going up.
Basically states that the mortgage rates dropped after the CPI report. Basically, this Consumer Price Index report comes out, and basically just to read the couple of headlines of this article, that the rate on the popular 30-year fixed rate mortgage fell to 6.28%, right? But it's still dramatically higher than it was a year ago. Now, this was last week. This week, the interest rates increased. All right. This week, I think the interest rates are at 6.42%. All right, but the decline came after the lower than expected readings of the November Consumer Price Index. The Consumer Price Index is what people use to, or what they use to measure the rate of inflation. All right, I just want you guys' opinion on this because as we had 3 consecutive weeks of the interest rates dropping, all right, now we have a week where I don't want Mr. Kramer on my page, but now we have a week where the interest rates increase. It didn't increase by much, but it still increased. All right, so it increased slightly, 50 basis points to be exact. But for the consumers to understand what it means, it increased from 6.41% to 6.2% this week. All right, and the thing about it is that the housing market is a very, very diverse housing market. Right, it's hard to speak about one market and cover all markets. Every market is different. You may have a market that's slowing down in some areas, and you have another area where markets is, it's still a hyper seller's market. So to be honest, in order to gauge your own market, you need to pay close attention to your local rental markets. All right. But I still want to get a true understanding of what you guys think about the market, because I know some sellers are sitting on the sideline right now, waiting for, because they're going to be buyers on the other side of this transaction. And so some are saying that interest rates are too high. See, to put it all into its proper perspective, I think that we have to take a step back and we have to look at everything for what it is. You have people who purchased a year ago. All right, they got better interest rates, but they paid a lot more for the homes, meaning some of them paid above market value for their homes. So when we look at the current housing market and values, some of those same people may not have, a lot of equity or the expected equity they thought they were having a home at this time, but they got better interest rates, right? So no, they may not be happy they're ready to sell right now, but at the same time, if they have a 2% or 3% interest rate, you may not want to sell, because you have a very good interest rate. Now, you have people who are purchasing homes right now, right? They're able to get better deals, better negotiating deals, better concessions than people who purchased a year ago. And the difference in it all is that the people who purchase right now are not getting the same interest rates as the people who purchased a year ago. But the people who purchased a year ago, right, they got a better interest rate, even though they paid more. But at the same time, the mortgage payments are somewhat similar, all right, to where we are now. Yes, the mortgage payments of people who are buying now at high interest rates are going to be a little bit higher, but the people who purchased a year ago had to pay a lot more money out of pocket because they didn't have any room to negotiate because of the hyper sellers market. And so in this market, you have to look at it. It's hard to time the market. And even when you do try to time the market, other people are trying to buy at the same time you're trying to buy. And as we see, as interest rates drop for 3 consecutive weeks, the applications for buyers increase. All right. So just understand that, when you own your home, when you own your house, you put yourself in a position where things that happen in the market happen for you instead of to you. Because even if you go in and you buy a home right now, you may, lock in your interest rate at 6.4% compared to somebody who purchased, last year and got an interest rate of 3.5%. See, the difference is, they may have to pay $20,000 above appraised value, or they may have to take on a home that had issues and they could not negotiate any repair costs. So now you're able to negotiate more repair costs, which saving you money out of pocket, not only on closing your home, but also after moving into the home, right? So there are savings on some form or fashion. So no matter when you buy, there's always something that's going to be in your favor. All right. So things that's happened for you. So again, if you don't have all the funds or resources to get into the housing market right now, I think right now is a great time to negotiate that. Banks have given down payment assistance. We're able to negotiate that. We're able to put closings for 30 to 45 days out, 60 days out. A year ago, we weren't able to get those types of closings going, right? You had to close the property within 15 to 28 days or 15 to 30 days max. There was no concessions. There was no, negotiating repairs unless it was mandatory for the financial institution. But for personal preference, you wasn't getting any repair costs for any finances. And then on top of that, you had to put money on top of the appraisal, right? Because they wasn't really allowing, the sellers wasn't accepting any appraisal contingencies. So it just, you can never time the market. You can never have a market that's more favorable to you than anybody else. All right, you're going to have to accept whatever the market has to offer at that given time. So there's always pros and cons, no matter when you get into the market. All right, but there are better times than others. But regardless of which time you get into the market, you put yourself in the position for things to happen for you instead of to you. So as people go into the market now and they're acquiring properties again, when interest rates take a step back, you can always go and refinance, right? And then be able to take advantage of the lower interest rates in the market while you already have negotiated the terms, the concessions, all of the good stuff to acquire the home. So now you're benefiting from the lower interest rates. So just keep that in mind. But I also want to remind buyers, any buyer who are going into the market right now, make sure you understand the conditions of your loan. You don't want to get a loan that will not allow you to refinance, right? Or require that you stay into the home a certain at the time before refinancing, because you want to be in a position to where have the flexibility to be able to refinance at any given time when interest rates are more favorable on your behalf. All right. And for sellers who are on the sideline, on the fence, right, it's a lot of buyers. There's a lot of buyers are jumping on the that's motivated right now. Any buyer who's on the market right now are motivated. All right. But we have to keep in mind too that it's a reason why the institutional buyers are coming in bulk, right, with large budgets, buying up stuff, buying up the single family homes. We cannot fall into the narrative that that there's going to be a housing crash like 2008. Right, we have to, for one, we don't want to over leverage in real estate or any other investment stock. We've seen that in the crypto world. All right, so we want to be balanced. For one, we want to stay balanced, but for two, we still want to be smart and have the proper market indicators from a consumer standpoint. All right, not even from an investor standpoint, from the consumer standpoint. And that, my friend, is where you want to look at the rental market. All right. No matter what market you're in, understand your rental market, because that will be, all right, the driving factor if your housing market it becomes stronger and withstand this changing market, a challenging market, right, per se, in this current time. If the rental market softens up, meaning if you start to see rental discounts, meaning move in discounts, first 3 months free rent type stuff. If you start to see those type of discounts, then it's telling you that the rental market is softening up. If the rental market is softening up, then the housing market shall follow. So as long as you have a strong rental market, it will be a driving factor for the housing market, because whether we understand it or look at it from this perspective or not, all right, people who are renting, who do not own their home, all right, they're susceptible to a pay cut month after month after month after month. And what I'm meaning to or referring to as far as pay cut is that if your landlord decides to go up on your rent $1,000 or $500 or $300, right? You essentially just took a pay cut from your work, because you still have to go in to check in your job. You still have to do the same job, perform the same task, receive the same pay. But at the end of the month, you're going to have less resources for your family to live on because your housing expense went up. That's essentially a pay cut. All right. So as long as you allow somebody to go up on your rent, you're susceptible to monthly pay cuts, depending on however your lease is written up, when they can increase your rent. So with that being said, all right, we have to position ourselves where things continue to happen for us instead of to us. All right. If you are having problem, these are a couple signs that you need to be aware of, that if you need to be on the market looking to own your own home. If you have trouble saving money, right? So if even after you pay your rent, you still do not have enough money saved up, all right, to be building a consistent savings, all right, then it's time for you to own your yard. All right. If you're consistently taking pay cuts, meaning your rent is continually going up, but your pay is not equivalent, all right, to the rental increase, it's time for you to own your own yard. All right. And last but not least, third, if right, what you're paying for as rental markets can afford you a larger home, all right, then it's time for you to acquire your own yard. All right. So a lot of the three main things I highlighted, right, are things that come automatically with owning your own home. For one, automatic savings plan. When you make your mortgage payment, part of that payment goes toward buying down the principal. When you buy down the principal, you add equity into the home. Equity is essential. Cash in the bank is your automatic savings. There's two ways for your equity to increase when you become a homeowner. One is by paying your mortgage or paying your rent, right? The second one is the market increasing. Right. Of course, over the past couple of years, we've seen the market increase for some crazy substantial numbers, right? Up to 30 to 40% year over year. But now we may see, well, we're starting to see the adjustment, right? A normal market normally appreciates anywhere between 5 to 7% annually. That's what the expected appreciation rate on the market should be, depending on where you live. Now, based on those numbers alone, the market is going to give you a consistent income, a consistent savings, all right, based on the market alone. Now, and outside of that, all right, it's going to also put you in a position to where it'll be saving money for you to be able to leverage should you need to upgrade and acquire a larger home. You can do so by just living in your home and allowing the home to save up money to put a larger down payment for a larger home, to where you don't have to, go and rob Peter to pay Paul in order to get you a larger home. All right. So just understanding that. And then outside of that, it also stabilizes your living expense. All right. It stabilizes your living expense when you own your own yard, and you can take a lot of the tax benefits of being a homeowner as well. All right. But I want to know your thoughts on the current housing market, especially with 3 consecutive months or 3 consecutive weeks of the interest rates dropping. All right. And now we're seeing a small increase on interest rates this week as of today, But we're also seeing an uptick in housing applications for buyers. And alongside of that, we have institutional buyers. The big hedge fund buyers are putting the big, increasing their budgets, coming in and buying more and more single family homes. And a lot of these builders are doing deals where they're signing over and selling, multi $1 million deals, right? I mean, they're selling hundreds of homes in a single transaction, hundreds of single family homes in a single transaction to these hedge funds. Like, what are your thoughts about that when you have the mass media telling you it might not be the best time to buy, but then you have the hedge funds buying, hundreds of homes, thousands of homes in one single transaction? All right. Leave your comments in the section below, man. Look, I'll be dropping more and more content. Talking about the market, the housing market, and updates as it continue to come out. But I want to know your thoughts, right? I'm always going to be a strong buyer. I'm always going to be on a strong buyer's market, but at the same time, I use a lot of formulas, right, to make sure that we don't make high risk purchases. All right, and that's the DSR. If you haven't seen that video, make sure you go to you subscribe to my YouTube channel and go and look for the video for high DSR. All right, formulas. It's a video called Formulas, and to go over some that you should know as a real estate agent, ones you should know for a seller, and the one that you should know as a buyer. All right. That's my time. Emmitt Combs, 6 years, 6 figures. Make sure you subscribe to the video. Subscribe to my channel. Like the video if you like the video. And I'm going to see you guys on the next one.